This is the Professional Edge. My name is Sean Todd, tax attorney, CPA, and certified financial planner. Host on the Professional Edge, aired each Sunday on WDAK in Columbus, Georgia, and also on my podcast, Professional Edge. So if you want to listen in and you're unavailable, you can always go to a Google Podcast or Apple Podcast. That's on YouTube now. And download the app and listen to me whenever you want to fall asleep. Yes, I say that tongue in cheek because this is not the enlightening criminal activity or anything like that, the crime scenes and things like that. It's not a talk show about what the latest celebrities are doing. This is actually stuff to help you as a listener here on the Professional Edge. A, plan your estate, make sure that that's taken care of. 2, protect your assets from creditors, and that could be even an ex-son-in-law or daughter-in-law when your kids inherit your fortune. The other thing is we want to reduce your taxes. That way you have more to spend and enjoy life and have more to fund, for example, your kids or your grandkids' college education. What vehicle would make the most sense for that? So we look at that. And then number 3, to make sure your investment portfolio lasts longer than your lifespan lasts. So you run out of time before you run out of money. So the topic that we've been talking about this session is market dilemma. We all had a wake-up call when President Trump announced the tariffs, and the market reacted in a very large, very quick negative fashion. Dropping down over 20%. The NASDAQ hit, I believe, a minus 30%. Here in a week, it was quick, it was down, it was dirty. And then lo and behold, we saw how sensitive the market is to news. Well, there was a story that ended up being fake news that said the tariffs were going to be halted for a second. Well, boom, the market went up, skyrocketing over 1,500 points in the Dow Jones Industrial Average. And then all of a sudden, boom, it was fake news. The bottom fell out. It's like somebody popped the balloon. A couple days later, President Trump said that the 20 plus countries were in negotiations, talks. He was going to put a hiatus on the tariffs being implemented for 45 days. The market shot up, had one of the top 5 days in all of trading history on the rebound. And then lo and behold, there was some other discussions with the increase in the tariff for China as retaliatory, and boom, the market gives up about 90% of that top 5 all-time day gain. So yes, we are being advised, or basically a wake-up call to where the market volatility, there is market volatility when you're an investor. So what do you do on that? Well, don't panic, because the market takes care of itself and works itself out, and you have to look at the long term. And if you're looking at getting a rate of return in the next 90 days, then I'm not sure the market is where you need to be as a listener here on the Professional Edge. If you need your money in 90 days, you need to probably put it in your savings account or a money market account, and then that way the principal is protected. You'll get a reasonable rate of return, but you have no risk. You eliminate that risk. So honestly, ask yourself, when was the last time you honestly sat down and evaluated your portfolio risk? Did an analysis, did a cross-section analysis to see what the underlying investments or stocks are and what the concentration is that within your portfolio? Most individuals have never done that. They just say, hey, I got this value fund, I got this large cap growth fund, I got this low price stock fund, I got these small caps, medium caps, this mix of portfolio. They have no idea what the underlying holdings of those mutual funds are, and if the cross section makes a higher concentration than normal. So that's one analysis that we do with estate management counselors. Number 2, we, take a snapshot for your safe and secure retirement, see exactly what you have in pre-tax accounts, that's IRAs and 401ks, and then we look at your after-tax account, and then we look at your Social Security benefit analysis, and we meld that together on how much spendable income you want to have in retirement And then we take into account the other concern, which a lot of people put in the back of their mind, is the longevity risk. We are the first generation that has to plan for 20 years in retirement. The previous generation had to only plan for about 8 years in retirement, not 20. That is a different animal to plan for. Now, as we all know, inflation is a silent killer. Well, in order to have $5,000 of spendable income, that spending capacity in the same dollar spent today, it's going to take close to $9,000 20 years from now at just a 3% inflation rate. So when we look at that, we need to keep the same purchasing power as we have today in year 10, year 15, and year 20 of retirement to sustain that safe and secure retirement. So that's another analysis that we do is what will it take dollar-wise if we have inflation? And it's scary when we adjust the number to 4 or 5% inflation. It just becomes eye-watering what amount instead of $5,000 a month you need to make the same spending capacity at a 5% inflation rate over 20 years. It's eye-watering. But it's fun to do that math once we have the numbers and the platform built with your own personal analysis. So we have a little bit of fun with that. The other thing, which is a wake-up call, is we all are realizing that the markets don't return a steady rate of return. Well, we went into 2023. Boom, we got 20%, 2024, 20+%. 2025 was looking like it was going to be another historic run. Well, we had a stopgap right here. Now, is the market accounted for the entire year right now? The answer is no. So with that volatility in the market, let's do what is known as a Monte Carlo simulation. And that is where we take your portfolio, we take 1,000 scenarios of random rates of return and see if your portfolio is going to sustain itself on the withdrawal rate through the 20 years of your retirement that we need to plan for. Excuse me. So let's think about this. If you started your retirement at the beginning of 2025, after those 2 back-to-back years of 20%, you're feeling very confident going into 2025. Well, lo and behold, how confident do you feel now? If you look at your portfolio statement, and I'm sure you do if you're recently retired, and you look at it and you go, wow, holy Toledo, I'm down 20%. If I had $1 million portfolio, I'm down to $800,000. What am I going to do now? Now panic sets in. Well, you know what? The sequence of return risk is also another significant factor in this market dilemma. Now, what do I mean by the sequence of return risk? Well, if I retired at the end of 2022 with $1 million, then at the end of 2023, if I didn't withdraw anything, I'm at $1.2 million. And then at the end of 2024, I'm at 136. Oh my gosh, look at that. I'm wealthy. I can't spend all that I'm making. So when you look at that, well, it was the sequence of return risk. It was a very positive for the individual that retired in 2022 because we had 2 exceptional years, the first 2 years of that person's retirement. But what if you pulled the cord at the end of 2024, starting 2025? Okay, we know who the president's going to be. Things are going well. Looks perfect. Fed says they're going to probably reduce rates depending on what inflation does. Things are looking strong. I got equity in my home. Awesome. Now we have this 20%, 30% down, depending on what hour you look at the stock market, and you're saying, wow, holy Toledo, my account went from $1 million down to $800,000 and it touched on $700,000 just here in the first 90 days, 120 days of 2025. I'm sick to my stomach. I got to go back to work. That's what goes through people's minds. So that is the sequence of return risk. And will your portfolio sustain itself over this scenario? And the best way to do that is, again, do a Monte Carlo simulation. We do that at Estate Management Counselors. And we see what the probability of success is through 1,000 random rates of return over those 20 years. So it may start out 3 years positive, 2 years down, 1 positive, 1 down, 1 up. So let the computer do the work and get the probability of success of your portfolio sustaining itself over the course of your 20 years of retirement. So again, to have that conversation, do give our office a call at 877-654-9798. That number again, 877-654-9798. Now, as a listener here on the Professional Edge, if I put this public service announcement out all the time, make sure you have your estate plan in place. If you have that old last will and testament that you did when the kids were first born, and now you've already attended one of their weddings, it might be a wake-up call that you need to revisit your estate plan, especially if it's all on that old, real thick paper that could be a placemat. That's another sign that you probably need to update your estate plan. Or you're one of those of the 50% that has no estate plan in force in place. That is also a wake-up call, because bad things happen to good people, and that you don't want to leave your family in a lurch. So that's where we at Estate Management Counselors have given you, as a listener here on the Professional Edge, a very, what I call, robust offer. It's at emcthebundle.com. That is Echo Mary Charlie thebundle.com. That's where we put your estate plan together. We review your portfolio and give you in writing recommendations for you. And then we also do an income tax analysis on how we can help you reduce your income taxes. And that's one on a set fixed fee. It's reduced dramatically. It's an inflation buster, but it also motivates you as a listener here on the Professional Edge to get things started and get things done. I know in 2024, you may have had this New Year's resolution to get your estate plan done. And guess what? We're already in the first quarter. That book has been closed on 2025. So I'm not here to wave your finger, point you out, but let's get your estate plan done. Take advantage of the bundle. It is emcthebundle.com, and get that coordinated. 1, your estate plan. 2, your portfolio. It's a wake-up call on this market volatility. And number 3, we just got done doing our income taxes, so now things are fresh in our mind. When you plan taxes is now for 2025, not after the close of the tax year, which most people start planning their taxes when they're gathering their tax documents, and there's not much you can really do. I appreciate you listening to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. And take care until we talk again.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Sean, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Sean Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Sean is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Sean Todd to learn how you can benefit from their multidisciplinary practice, where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Sean Todd by calling 1-877-654-9798. That's 1-877-654-9798.